And we're live. Hey, everybody, it's your boy, Chicago Sean. I'm joined with my good friend, Steve Strazza. Steve, you're positively glowing right now. What's going on over there?
Oh, no, I don't know what you're talking about. I have a greasy face, I've been told.
No, no, no. Come on. You're deflecting. We were talking before we went live. You were working on your what was that phrase you used? Your glamour muscles? Is that what you were doing?
Like glamour muscles, so like my biceps. Yeah, yeah,
So you
glamour
just you
muscles.
just snuck in a quick workout right before swole. Is that what the kids
Yeah,
say? Swole?
it's my live video ritual, so it's fine. Now everybody knows.
Well, look, you're one handsome devil. So thanks for doing that for us. And that's a hot looking shirt you got there too. Way to rep. Way to represent.
All day.
All right, so let's
Thank
get
you
down
so
to
much.
business here. People don't want to hear us screw around. We put a new trade on today, taking advantage of the elevated volatilities that we're seeing in the market. You and I were chatting this morning, and I said, Steve, I'm looking for some premium selling opportunities here. I'm looking for stocks in a range. And you wasted no time, and you said,
IWM. I mean, the Russell 2000. There's no better example of this sideways messy market than the small cap Russell 2000. So I think
right, we
that,
got
and
a
it's right
chart
smack
up
in the middle
here.
range, which is beautiful.
Sorry, I didn't mean to cut you off. We have a chart up here. You could see the range going back to January. I mean, this is the definition, the very definition of an instrument in a range. Now, I drew some lines kind of outside of the range. I know that the lows are closer, more to like what 209, I think, if on a closing basis on IWM, and the high was around 234. Is that right?
Yeah, you could draw this a number of different ways, but the lower bounds are somewhere between 205, 212. I like 212. That's closing prices, but it's a mess. So it's going to be range bound. It's going to be sloppy. It might fail below those levels again.
Right. Well, look, when we're looking to put on delta neutral premium selling trades in market environments like today and this week where we've seen volatilities rising, we're looking for stocks or ETFs that look exactly like this IWM chart. Now, the bet that we're making here is that IWM is probably going to continue mucking around in this range here, at least for a couple more weeks. That's the bet we're making. Could IWM break higher or break lower out of this range? Certainly. And you know what? Our timing's a little conspicuous right now, Strazza, because in 20 minutes from right now, we got the FOMC meeting happening, which, used to introduce all kinds of volatility to the markets. It seems to be a little dampened these days. So we could see some volatility later this afternoon in IWM, but the bet we're still making is that we're going to stay in this range, and we think it could last for a couple more weeks, right?
I think that's a really safe bet to make too. Like you said, I was thinking sectors when you said you were looking to sell premium, but the strongest sectors in the market, whether it be tech or communications, just failed to break out. They cut to new highs and then, made a fast move lower, semiconductors too. And then some of the weaker areas of the market, like industrials, materials, we're seeing dig in at support. So you don't really want to trade any of those. You want something that's right smack in the middle of its range. And if the weakest stocks aren't breaking down and the strongest stocks aren't breaking out, then it's very likely that the Russell's going to be stuck in this range for longer.
And this goes with the theme that we've been talking about all summer, is that the market's kind of just a hot mess right now.
Yeah. We had an
And
analyst meeting this morning to talk about our quarterly playbook. And it was hilarious. I was like, it feels like Groundhog Day because nothing has changed. We were going through all the themes from last quarter. And I'm like, this is the same. This is the same. This is the same. It's just like, that's just the market we're in.
right. So, getting back to the bet that we're making here in the options market, we are putting on a Iron Condor. Now, I typically, when I put on an Iron Condor trade on, I typically want to be, less than 50 days of expiration, somewhere in the, 35 to 50 days is kind of the sweet spot. These November options right now have 58 days till expiration, so a little outside of my range. But that's okay. We could fudge it a little bit. There was good premium being offered at strikes, outside of the ranges that we talked about here. So these lines that I've got highlighted, these are the strikes that we're selling in our Iron Condor. So we're selling the 235 calls and we're selling the 205 puts. This is the P&L graph that we've got right here. We brought in a $1.80 credit I think you could still get a $1.80 credit in this trade right now. And look, the plan is really simple for me on this trade. If IWM has a meaningful breakout, and by meaningful, I mean it trades through our long strike. So if it goes up above the 240 call, or if we trade below the 200 puts, if we trade outside of those ranges, that's my signal that, all right, wave the white flag. We're losing on this trade. Let's just close it down and limit any further losses. But the nice thing is an Iron Condor is a defined risk trade. We brought in a $1.80 credit on this trade. The most the spread could be worth, if there's a big move, the most it could be worth is $5. So $5 minus the $1.80 we collected at initiation means the most we can lose is $3.20. I don't want to lose $3.20, Strazza, but that's the most we can lose, and that's how we size our positions, so that we don't get hurt, so it doesn't really hurt our portfolio that much. Meanwhile, I'm just looking to make a quick profit on here. I'm not going to hold this thing all the way to November expiration. The profit plan here is when I can cover this entire structure down for 90 cents, if I could pay 90 cents to buy everything and close everything down, I'm going to do that. That represents a 50% capture of the premium that we originally collected, right? We collected a $1.80. When I could buy it back for 90, I'm going to take my profit and run. I'll let it be someone else's problem holding that risk all the way until November. That's not something we like to do. Strazza, any parting words on this IWM chart before we let people go?
All I'll say is, it makes sense. It's simple why we're doing this, right? We're not seeing things really change in the market. Conditions aren't changing. They're remaining messy. We're seeing patterns fail left and right. So we're not betting on a pattern breakout. We're just betting on more mess. We could have put this trade on in February, March, April, May, June, July. Would have worked every time. It'll probably work again this time.
We're betting on more mess. That's the tagline right there, Strazza. Thanks everybody for joining us. Strazza, you go towel yourself off and we'll talk later.
Thanks for having me, buddy.